Finance Ministry of India has released GST collection numbers for the month of July, and the gross GST revenue of 1,65,000 crore rupees has been collected is what we know. It also marks a record 11% growth year on year. So let's find out more about the kind of numbers when it comes to raking in the moolah really for GST as far as the government is concerned, and that has been really moving up quite steadily. Let's find out more from this report that my colleague Prakash has sent from Delhi.
The government has collected more than rupees 1,65,000 crore GST revenues in the month of July. Finance Ministry has come out with the details of GST collection numbers for the month of July. It says the GST collection numbers have registered 11% growth on year basis. Out of rupees 1.65 lakh crore, rupees 29,700 crore collected on account of CGST. When it comes to SGST, collection is at rupees 37,600 crore. Whereas amount collected for IGST, it is at 85,930 crore. So it's been fifth time since inception of GST that the GST collection numbers have crossed rupees 1.6 lakh crore. When it comes to domestic transaction, as per the details, revenues from domestic transactions are 15% higher on year basis. So it's a positive development for the government as GST collection numbers are growing steadily, and it's a reflection of GST Council's decision as well. GST Council has taken several steps to improve compliance and has taken several steps to plug in tax evasion.
Yes, indeed, and those seem to be paying off for them. In fact, ET now has also learned from sources that now in this GST Council meeting that's going to take place tomorrow, the 2nd of August, now that's going to decide the framework for 28% GST on the full face value of transactions when it comes to online gaming. In fact, where are expectations pegged? My colleague Prakash has been tracking that as well, because yes, the industry doesn't like the fact that it's going to be 28% GST. That slab is something that they find too high. Also, when it comes to how this is going to apply, though we need more clarity, but it is going to be on the face value of these transactions that take place, on the kind of deposits that are made at the time of online gaming. So when it comes to the GST Council meeting tomorrow, here's what we're expecting. My colleague Prakash has sent us this report as well from Delhi.
The GST Council is going to meet tomorrow through video conferencing, and the prime agenda for the GST Council is to decide wider framework to levy 28% GST on full face value in the context of online gaming. As you are aware that in its last meeting, GST Council had decided to charge 28% GST on full face value on every category of online gaming, but it has not given clarity as to how 28% GST on full face value would be determined. Sources are informing that the GST Council will give clarity as to how 28% GST would be calculated, whether it will be calculated based on entry level or every bet. That is something that the Council will come out with clarification. Moving ahead, sources are also informing that GST Council may approve wider definition of online gaming. A new definition of online money gaming may be included under online gaming category. Deposit of money by a player, including digital assets and token, can be considered as online money gaming. When it comes to the issue that is with regard to overseas online gaming platforms, sources are informing that GST Council may make it mandatory for online gaming platforms to register themselves in the country, and they will be brought in under ambit of GST and treated at par with domestic online gaming platforms. So these are the important agenda for the GST Council to discuss and come out with clear clarification.
Yeah, so primarily it's going to discuss the framework under which 28% levy of GST is going to work when it comes to online gaming. But let's just discuss the modalities when it comes to GST revenues as well. M Govinda Rao is former member of the 14th Finance Commission. He's joining us on this edition of India Tonight, along with Garima Kapoor, the chief economist at Elara Capital. Thank you both for joining us on the show. Let me ask you, Mr. Govinda Rao, as far as this mop-up is concerned, we've been steadily growing. GST is working in a way that the government would possibly be happy with. What are the reasons that you describe to it? Higher compliance? Do you think technology is working in the favor of GST? How exactly is the government being able to see this 11 to 12% year-on-year growth when it comes to GST revenues?
Well, what has happened is that GST technology platform has settled down. And with the technology platform settling down and the reverse charge also being applied on those categories which, the registered dealers will have to, sort of get it from the unregistered dealers. They will have to pay the tax. And the administration or the administration has really been strengthened in the sense that this fake invoicing, this thing, in fact, they're looking at the entire details of the registration. And the companies which have been registered, fake companies which have registered just to give the invoices for the input tax credit have been, increasingly are being traced. But the most important thing I would say is that settling down of technology platform, because earlier, technology platform was a major problem, and then, virtually GST had become a voluntary tax. Now, I think it's sort of getting deeper, steadier, and obviously, I think in this present circumstances, GST will continue to grow and the compliance will continue to improve.
Yes.
With the better administration.
Yeah, only yesterday we were talking, Mr. Govinda Rao, about yesterday being the 31st of July and how so many more filings of income tax returns is happening as well. So compliance in general is going up and technology is definitely helping, like you're pointing out. But there is this one factor right now because, like you're saying, now that you have a system that is getting stronger, there is no getting away from taxes like GST. And now online gaming, as far as the industry is concerned, they have to face a 28% levy on these transactions. Tell us, Garima, in your opinion, this entire formula that is going to be something that the council is going to work on, arriving at that formula, how much is that going to reflect the council's effort to restrict online gaming as an activity, or to perhaps help rake in higher GST, something that we are talking about today? Or do you think they're going to come up with a formula that will actually help the gaming industry grow, which is something that the industry doesn't believe, but perhaps you do?
I think there's likely to be, and we already seen there's a disconnect between what the GST Council is taking decisions and the ministry is probably overseeing the online gaming, I should say, industry. Clearly, the definition is going to hurt the industry. We've seen a number of industry representatives after the decision was taken come out and open and say that this will probably kill the nascent industry and it should not be taxed at that particular rate. But I think in terms of revenue, I would not think that this would be contributing a significantly huge chunk. While all of this was outside the ambit of GST, remember how many people in this country would actually be engaging in this particular model in terms of the online gaming. So I'm not sure this could actually bring in a huge revenue. Should this be taken as a decision? But I think beyond this, what is actually working beyond the spectrum of online gaming as a decision, a number of steps that the government has been taking, as GST Council has been taking for last 2 years, particularly since COVID. So there has been improvement in data analytics, the settling of technology. There is a greater fee that is coming in terms of input tax credit. There is e-way bill system that is completely now settled. You have GPS tracking on e-way bills, and plus you have a variety of data that is getting used. On top of it, the formalization that the country saw, and particularly the concentration from small sector to the large sector, especially during COVID and soon after that, is also helping get more and more businesses into the compliance net. So what we see partly is an effect of compliance, because if you look at the year-on-year growth, we are tad above the assumed tax revenue growth by the government, 10.5%. So we're growing at about 11.5% for the first 4 months of the current financial year versus 30%. In my assumption, this run rate should continue, while there are naysayers who believe that inflation was a huge chunk of this particular revenue. In my calculations, inflation was not contributing more than 30,000 per month, and it is a compliance that should probably continue to give you the benefits.
And that's what we are talking about. Compliance is definitely growing. But when it comes to the nitty-gritties of formula, Mr. Rao, what do you expect this formula to look like now that it is quite quite clear that the levy of 28% is going to be on the face value of the transaction and not the commission or the winnings alone. What's your view, having been part of such discussions in the past? What would be a formula that would be, in one sense at least, a win or maybe half a win for the industry?
Well, I'm a person who has worked on taxes, and expansion in the tax base is the most important thing. Broaden the base, lower the rate, have a simple and transparent tax system. This is what we all say. So bringing in any gaming is online or offline gaming is an important step in broadening the base. I would say that there are many more items that have to be brought into the tax base. Now, generally speaking, I am not so much worried about the industry, because this is not an industry which is a meritorious industry. This is an industry for basically gaming, and then obviously, there is nothing that nothing meritorious about this. I don't know whether this will restrict them, because people who want to game will continue to game. Generally speaking, GST is on the turnover. In fact, it's on the total turnover, and minus the tax, input tax, the taxes paid on the inputs. That's how you get the value added, and therefore I would presume that they would charge on the total turnover value, and if there is any credit to be given, they will. So input tax credit to be given, they will give, and then that's how they will proceed. I don't think there will be a new formula for that. It will be the same principle. The same principle, the formula may be different, but the principle will be the same. And I am not one of those fellows who want to say that I want to encourage gaming.
Yes.
I'm not.
So there is that moral angle as well. Garima, when it comes to taxation in a developing economy, when it comes to aspects of economic growth and industries like online gaming, especially when you're talking about online money gaming, how tricky is it to arrive at a formula?
I think it's always tricky given the fact that we're a developing nation and the demands in terms of the number of people who are in the tax bracket or currently in the tax net are far fewer than what it is for developed countries. And naturally, there is a challenge in terms of pulls and pressures. But I think this government has been pretty clear since the beginning. I think in the GST Council, since the last 5 years, the way it has operated, it has given probably relief to segments which are necessary in terms of food or in terms of sectors which are critical. By that logic, there is something like a sector, something like a cement sector also should not be taxed at the rate that it is. So I think while you continue to rejig the pulls and pressures in terms of industry lobby, it is very important to understand to remain focused on sectors which are absolutely necessary for your growth and development, given the nascent state that you are in, and probably not to be extremely worried about demeritorious industry, as my co-panelist recently suggested.
What do you say to that? Because it is true, as far as the developing economy is concerned, online skill gaming, it's currently a $2.5 billion sunrise sector. It's set to reach $5 billion by 2025. That's the projection. Do you think it can reach that potential despite the kind of levy we're talking about, 28%, notwithstanding even the formula that will be eventually applied?
If I have to say that I agree with Garima that the things which have contributed to growth. In fact, I would say that the 28% category should not exist except for the demerit goods and services. In fact, I would be one of those persons who would assume, I have written that eventually we have to, this is the time to go to the second generation reforms in GST and reduce the number of rates only to 2, and then 28%, particularly whether it is on automobiles or cement or construction industry in particular, is it's a labor-intensive industry which should not happen. Whether the gaming will reach $5 billion is generally an inelastic price inelastic sort of a thing, and I should think that it could happen with the growth in incomes. And with the spread of with more spread, it might happen.
Self-balancing act, there's no taking away from that. As far as developing economies go, these questions are bound to come up from time to time. Whether or not online gaming companies will have to go back to their drawing boards, rethink their strategies, considering that it's a given, a 28% GST levy. That is something that we'll have to wait and watch. But for the moment, we are watching out for details to emerge out of the GST Council meeting that takes place tomorrow, the 2nd of August. And thank you for joining us with your perspectives, Mr. Rao.
Thank you.
Garima,
Thank you.
it's a pleasure having you on India Tonight.
Thank you.
Thank you.